Please read this disclaimer carefully before proceeding further. Right? So when the market starts to fulfill the conditions of bear trend or bull trend after a consolidation, that's when you can say that it is coming out of consolidation. And this is the first point when it came out of consolidation. Now, is there any guarantee that it cannot go back into consolidation? No, there are no guarantees. Okay. Now, one of the things that I will tell you, we can read this entire structure using this impulse and corrections, right? The bull and bear trend definitions, right? It's very easy. And at the same time, it is not subjective, because if you ask someone to draw an arrow from the highest point to the lowest point, they will do exactly like this. There is no deviation to that, unless they are being very lazy and they draw something like this. But I specifically asked those people to actually draw from the highest point to the lowest point. So if they will also draw like this, I will also draw like this. There is no subjectivity here, right? And if there is no subjectivity in drawing the arrows, that means all of us will be reading this structure exactly in the same way, right? If we follow the impulse and corrections and all these arrow drawings properly, right? And that is a very powerful thing, because now when I'm talking to you, when I'm saying, okay, this is consolidation, you cannot deny that, because we are all following the same rules, right? And that is a good thing. That eliminates a lot of subjectivity, right? So when I'm going to present an analysis to you, you'll understand exactly what I mean, right? And when you will do the analysis, and when you come back after 2 years and look at the chart, you will still be able to say, okay, this is exactly what I meant. No subjectivity at all, right? Now think about retail traders. When they see such a structure, they usually have different ways of drawing it, because remember, part of our job is to understand what those guys are thinking and how they are going to react, because we do not want to be doing most of the stuff like that, because they are part of that 80%, right? So we are playing with little different rules. For that, we need to understand at each step what they will be doing, what they'll be thinking. Okay, now most of them will see this as a flag or something like that. Have you seen this before? This sort of analysis, right?
Yeah.
Now, when you have
cup and handle.
Yeah, all of that, right? Cup and handle, head and shoulders, flag, and pennants, and all that, right? So, I mean, there is nothing wrong with that. The only wrong thing is that you cannot make good decisions or accurate decisions with them, because they are very, very subjective. Now, I have drawn it like this, and it starts to make sense, right? This looks like a flag pattern, right? Yeah. Now, what if I draw it little differently? Still looks like a flag, right? But you see the gradient of this line and the touches is completely different, right? What if I draw something like this? Still looks like a flag, right? Yeah, it depends on what they are looking at. Few people will try to match this point, and few people will try to match this point. Sometimes they will say, okay, I'm going to ignore this, I'll call this as a fake breakout, because it's all subjective in their nature, right? But we are not going to do that. Why? Because we have even better method of assessing whether the market is in consolidation or not, or is it trending or not, by drawing those arrows. We have strict definitions, and you cannot deny that once you have started to follow those rules, all of us will be at the same page, right? But if I give you the rules of drawing those flag patterns, you will still be very subjective. Few people will try to do something like this, others will try to do something like this, right? So that's the whole point. You need to be very, very specific, right? You need to be very, very accurate, because if you're not being accurate, then how can you guarantee that your entry point is going to be accurate, your exit is going to be accurate, and your profit target is going to be accurate? You cannot. Because remember, you're not being trader first, you are an analyst first, right? Analysis gives you plan, which you are executing as a trader. And if you are not being accurate or specific in your analysis, then trading won't be consistent or accurate either, right? Okay, so the market is now, most of the retail traders will think this entire thing is actually consolidation, but they will also think that this is actually kind of a downward falling channel, or there are several ways of looking at it. Okay, but we won't do that, right? If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form. Thank you for watching. Find and follow us on these social media channels.